Silver's new bull market, just the tip of the iceberg. This Tuesday, silver surged 4.4% higher on strong Asian bidding in parallel with gold. The catalyst was fascinating. China finally launching its long-awaited yuan-denominated gold benchmark. China is the world's largest gold producer, importer, and consumer, a commanding position that should grant it much bigger say in the gold industry. The new yuan gold price will ultimately challenge London's century-old hegemony. The prospects of more Chinese with their deep cultural affinity for precious metals having easier price discovery and access capitulated silver into bull market territory. Its previous best close of 2016, about a week earlier, was only 18.5% above its 6.4-year specular low in mid-December, leading into the Fed's first rate hike in 9.5 years. Tuesday's big Chinese silver rally boosted this young upleg's gains to 23.7%. That propelled silver decisively across the official new bull market metric of plus 20%. Interestingly, silver was even faring better than gold. While gold entered new bull market territory in early March, at the best of the middle of March, it was only up 21% from its own mid-December 6.1 secular low. While silver got off to its usual slow start, it has already surpassed gold's gains. This outperformance will mount. Silver's new bull should surprise no one. Late last year, I extensively discussed the anomalously low silver prices and that this metal's resulting vast upside potential. In early October, I recommended a new long-term investment in an elite silver producer to our monthly newsletter subscribers. As of Tuesday, it was already up 208%, a triple in less than 7 months. I wrote about silver's deep undervaluation in late October. The basic premise behind this research is all our recent silver stock trades is simple. Silver's primary driver is gold. This white metal ultimately acts like the yellow metal sentiment gauge, so when gold climbs decisively, it motivates investors and speculators alike to migrate capital back into silver. Since silver is such a tiny market relative to gold, capital inflows have outsized upside impact on silver prices. The latest fundamental data from the Venerable Silver Institute shows total global demand in 2014 of 1,067 million ounces, worth $20.3 billion at silver's average price that year. That compares to total world demand for gold at 4,226.4 metric tons in 2014, according to the respected World Gold Council, respected my ass, which was worth $172 billion at gold's average price in 2014. That makes the world silver market 1/8 the size of gold. So any dollars buying or selling impact on silver prices is on the order of 8 times what it would be in gold. It doesn't take much capital at all in the grand scheme of the markets to really move silver. In early 2016, silver remained extremely undervalued relative to its dominating primary driver, gold. So a mighty silver bull was inevitable. Like in the past, silver soon had to catch up with and then surpass gold's gains. But like all bulls, silver is definitely climbing the proverbial wall of worry. Wall Street remains pessimistic on silver, expecting this move to run another 5 or 10% higher at best before more Fed rate hikes slam silver lower again. Never mind that history proves gold has really thrived during past rate hikes, which pushes silver up. Most professional analysts still remain very skeptical on this silver bull's sustainability. Let's start with future speculators who had an outside influence on silver prices in recent years, with investors largely abandoning silver. Let's see. Despite this lumbering bear trend, silver did enjoy some major rallies in the recent dark years. One of them, the massive bounce after silver's 18.1% near crash in just 2 trading days in April 2013. In sympathy with the gold panic, surged 32.6% higher, but that was far more decisively in the bull territory than silver's latest surge so far this year. But that mid-2013 silver rally and those that followed were largely driven by short covering. Short covering is fleeting and unsustainable. Speculators simply buy to cover silver futures shorts because the metal is rallying and hammering their capital, not because they have any conviction that silver's fundamentals are bullish. This involuntary mechanism buying is also finite, limited by the total silver futures contracts speculators hold short. Once those are covered, that buying pressure just vanishes. 2015 silver surges were similar, with the initial 19.2% one early last year fueled by an enormous 41.7 thousand contracts of short covering, but only 1.6 thousand of long buying. That's a staggering 26.1 times ratio. Interestingly, one of the reasons I got so bullish on silver late last year was the likely all-time record peak in American speculators' silver futures short positions of 81.6 thousand contracts early in July. Such epic shorting couldn't be sustainable. Rather ironically, speculators also added longs on balance as silver ground lower on balance in its bear market downtrend between 2013 and 2015. There were plenty of speculators who realized silver was an incredible fundamental bargain, but they could never muster enough concurrent buying to break silver free of its downtrend resistance, which would have started attracting in more capital from other traders. This silver bull is very different from all the recent years' silver surges. There were 20.9 thousand contracts of short covering, similar to recent years' major rallies, but there were also nearly 20.4 thousand contracts of speculator long buying. That's almost an even ratio, unlike anything seen in recent years. This was also more new long buying than any other rally in recent years enjoyed, which is very bullish. While silver's last technical bull market in 2013 was driven exclusively by short covering, today's is seeing alongside speculators high conviction voluntary buying already nearly outweighing the usual short covering, and I strongly suspect that this latest COT week's data to be published several hours after this essay will show long buying taking a commanding lead. 2016's new silver bull is far different from 2013 to 2015. During that big 2013 rebound out of silver's near crash that was technically its last bull, investors did indeed flood into silver's driving and SLV holdings, building of 22.3 million ounces over that span, but that wasn't enough to overcome the terribly bearish psychology that collapse spawned back then. Ever since, every major silver rally has suffered from SLB differential selling. Stock capital was exiting silver. Silver's new bull market in 2016 has proved radically different. While silver investors remained quite skeptical about deploying capital in January and February, they returned with a vengeance in March. I suspect the catalyst was gold itself officially entering a new bull market early last month. Its first foray into bull territory since 2011, investors don't want silver until they see a convincing and decisive gold rally. Just as in gold, this new silver investment buying that makes this year's young silver bull so different from all the failed rallies in recent years. When investors start buying again in a big way, emerging out of major secular lows, that buying tends to run for at least a couple of years. Investors are strong hands buying to hold for the long term based on fundamentals, unlikely to be shaken out with little or no leverage. Let's see here. The bottom line is silver has entered its first new bull market in at least several years. This was driven by a combination of speculator silver futures, short covering, and long buying, but most importantly, a major new investment buying. Silver hasn't seen investors start to return in years, which makes 2016 new bull look like the real deal in contrast to recent years' fleeting short covering fueled surges that soon collapsed. And once investors take the cue from gold's strength to start migrating back into silver, the resulting bull markets tend to run for years and grow to monstrous proportions, with silver just emerging from such an anonymously low price extremes relative to gold. It's going to take vast buying to mean revert its price back up to normal levels. So 2016's young bull is almost certainly just the early vanguard of a massive new bull. I sure hope so. Hopefully this massive raid of the last 2 days won't be any big deal and silver will keep going up next week. I guess we'll see here in a couple of days. Anyways, take care, keep stacking.